Hello, folks. Brandon Chapman with today. It's another Theo night video for Monday night. What is it? August? I was going to say April. August 23rd, 2021. And it was good to be with you this evening talking about the market. You know, as we stretch for new highs, look at the S futures here intraday, achieved a new all-time high plus a new all-time high close. You know, what's going on, right? What does the future hold for the broader market? We're going to talk about that. So bonds, they're not buying the bull, but semiconductors are. So we'll talk about the performance today, areas that you may want to watch for this coming week. Anyway, so as we kick things off, the S obviously very bullish the last few days. We had very, very bad intraday breadth on the 19th. For example, something I like to look at is something called the advanced decline line, right? Well, actually, we're going to look at advancing declining volumes. So we're going to go DVOL plus $UVOL. And what you saw intraday, and I'm bringing up what's called a pairs ratio. And we're going to bust this out to like a 5-day, 5-minute chart. And it was even more pronounced than this. But what you saw on the open, for example, last Thursday, was extremely negative breadth in terms of declining issues and volume on those declining issues. In fact, if I flip this to a 1-minute chart, it should even look more ugly here as we spiked up last Thursday well over 10. So you get kind of that 90% plus volume on down to stocks, for example, right? So this is an intraday kind of sign that, hey, we're probably capitulating a little bit, but really ultimately the rally that we've seen ever since has been much, much more significant than you probably would have expected, except for of late, you probably had to expect anything on the bullish side. But the problem is equity investors are coming in. When you look at the performance, so here's a breakdown of the sector performance on the day. You'll notice over the last 3 weeks, if I sort it by a 3-week performance, financials are right up there, utilities are up there, technology, healthcare, the S&P is up 2%. You'll notice most sectors are underperforming, especially energy. You look at the last week, for example, utilities slightly negative. Obviously, today's reversals kind of change this dynamic, but utilities was one of the better performing sectors last week. Healthcare was the top performing. And so what you're seeing today is kind of a reversal of that, right? With energy being the worst performing, now becoming the best performing today. When you look at the energy sector, you're really coming off very significant lows down here. It's not like we're screaming we're forming new highs. What you're seeing today is what? Predominantly an oversold rally in the market led by the areas that are probably the most oversold. Look at it here, for example. Cyclicals up. Technology. This is the one area where you're seeing continued strength. Communications. We're not quite at a new high. And even if you break this down between Google and Facebook has not performed at the same level. So the point is, the areas of the market that are the strongest today, at least, are the ones that have been the most oversold. So the question becomes, is this kind of a new leadership pattern? So if we go back to the yes here, is this a new leadership pattern where we're going to see ultimately, energy lead out and cyclicals lead out? While it's possible, it may just be one last gasp as we reach for a new all-time high. And we'll have to see in the coming days whether this plays out. But the bullish nature we're seeing in stocks has not necessarily extended to the bond market. So, for example, if we look at TNX, this is the benchmark 10-year yield. You'll notice, yes, yields backed up as financials did really, really well kind of that first week of August. But since then, they broke down a little bit. We're going through a process of consolidating. And today, you actually saw yields fall just a little bit as the market tested new highs. It wasn't exactly the boon that you might have expected for financials and for the market, kind of that inflationary type trade. Instead, what we saw is yields actually dropped slightly, and the trend generally for yields has been down, with the exception of early August. With the Jackson Hole meeting coming up, the potential talk of tapering and other things, this might be a very temporary position that bonds find themselves in. We may see a breakout this week. We'll have to see how this plays out. But anyway, 10-year treasuries down slightly today. Now, as you contrast that with what's going on with corporate bond markets, if you follow like option adjusted spreads or OAS spreads for high yield, it's not looking pretty. That's kind of hard to show on a chart like this. Something that I like to bring up is something called HYG plus IEI. When you're comparing bonds, something it's kind of like an option delta, it's called duration. So if you compare products that have similar durations, they should respond similarly to changes in interest rates, for example. In this case, if you look at the yellow line, this is a ratio of high yield credit to 3 to 7 year treasury bonds. Now I realize that HYG's duration is probably a little bit less than 3, but it's as good as we're going to get as far as a comparison. What this means is that if the line is rising, it's showing that the spread between treasuries and high yield credit is contracting. If we're seeing this yellow line fall, it's showing that the risk spread between treasuries and high yield is expanding. And that's exactly what you're seeing right now, right? So while we've ticked up the last couple of sessions here, in essence, you'll notice that spreads are lower. You'd have to go back to March before we've seen as low as we've been here over the last few weeks. So this is an important one to watch. If we start to see this break down with the rally in treasuries, if we get the TNX falling this week, it could be a pivotal thing to watch as we're starting to see spreads blow out, meaning between high yield or junk bonds and treasuries. So something to watch. You could also extend this to LQD, which is corporate investment grade bonds. These are credit-worthy companies against IEF. This is 7 to 10 year treasuries. You'll notice this has also been trending down since June, meaning that the spreads that corporate investment grade bondholders are borrowing at is rising relative to treasuries, which reflects what the government borrows at, or in other words, the risk-free rate. And so we have this kind of juxtaposition here, right? Where the S&P is at new highs. As you look at the VIX, we're stretching towards lows here. And we have this scenario building up where maybe we do start to see more weakness as we enter the fall in September, October. Because what's interesting is you look at VIX. When you start to break it down and look at the term structure of the VIX, we're taking 3-month VIX against 1-month VIX. This is interesting because this ratio is shot back up again above 1.2. What you're seeing right now is any little correction in the market, 2-3%, is being bought so quickly. What happens, we're resetting this. We're all of a sudden back month volatility, in this case, is about 23-24% higher than 30-day volatility. And that should be a little warning sign. When you get above 1.2, this is a time where you got to be a little concerned over a potential correction. You'll notice we've existed above here for quite some time this year because we've been met with so many extremes. But when you start to contrast with what's going on with the SPY, or the SPX rather, I'll just use the SPY as a proxy on this one here. Frequently what happens when you quickly bounce and you stretch, frequently the movement in the market to the upside really starts to stagnate as you get to these upper levels. So this correction here quickly got back to the upper level in here. The price stagnated. We saw another pullback and a quick move higher again. Again, it stagnated as we stumbled higher, eventually correcting again, and then going to that extreme. And we stumble higher just a little bit more, as in essence, we're seeing the pace of the advances starting to almost diverge, to where we're looking for potential weakness in the near future. So what we're seeing is that this has escalated very, very quickly on this 3-day rally, as back month volatility is now trading at a very, very high level relative to 30-day volatility, is showing expectations of future volatility ahead. As you look at the skew index, on Friday, it closed at 153. We're at very, very high thresholds up here, pushing at times to 160, even pushing to 170. All this is showing you as what? As you go back to the S&P, limited upside with a lot of downside. And again, there's whether or not we've realized the downside risks since last maybe September, October, we're about to, and we will at some point. And so you've got to be prepared for that. So anyway, by looking at the volatility, it gives you a sense of where we're at. And as you start to look at the option spreads, it starts to get kind of a realization that, man, things are not as calm as they may seem. The lack of consistency in sector leadership has also been an issue. Okay. Now I mentioned semiconductors. Well, if you look at SMH, for example, this is an ETF that tracks semiconductors. This was up almost 3% today. And so a phenomenal move. We've had a little bit of weakness over the last month. We've had trouble kind of getting out of our way in semiconductors. Of course, semiconductors have been a major talking point for like Toyota Motor Company and Volkswagen. Toyota Motor Company announcing last week they're cutting production by 40% from 900,000 vehicles to 500,000. That's a big deal. They're dealing with empty lots and they're cutting production. And they say it's because of semiconductor shortage. Now, I had a chance to read an article this morning and suggested maybe it's not as short as people might think. There are some stocks out there. Maybe it's not the right stocks. I have no idea. I do not know this industry as well as analysts that are out there. But I find it interesting that many semiconductor companies are out there expanding their production, investing in more production. And the question is, are we going to soon find ourselves with a glut? As you look at companies like, for example, Micron, it might suggest that. What about Western Digital, WDC? It certainly might suggest the potential glut that might just be right around the corner, that these companies that have invested in more production may ultimately see things come in, that these memory chips in particular from Western Digital and Micron may not be in as high demand. But as you look at NVIDIA, however, graphics processors, this is an entirely different phenomenon, right? What you're seeing here in NVIDIA is higher lows, equal highs, breaking out today on significant volume. And as we look at a lot of these names, there are also names that have seen a lot of option activity today. So for example, NVIDIA, if we come in and we look at this week's expiration for August, 144,000 contracts traded on the 220 strike. I'm sure there's some buying and a little bit of selling this, but predominantly we're seeing a lot of buying-oriented interest on these weeklies. Now, whether or not this means that we're going to see a tremendous move in NVIDIA going forward throughout the week, what this might just indicate, we might be persistent volatility throughout the week. So it could create trading opportunities, maybe intraday, for possible potential intraday volatility. For example, WDC up 3.73% today. This one was actually a September expiration out here at the 65. You'll notice that's a little bit higher than the open interest. But when you come down, you look at the time and sales for these options, you'll notice there was 7250 calls bought, nearly 5,000 contracts, nearly 5,000 contracts on the 65. 4978 is greater than what? It's greater than the open interest. So again, this is new buying activity at the 65, again at the 7250. Again, indicating what? Some bullish potential interest coming in off of a very oversold position. Potential going to 65, yeah, maybe even possibility of going to 7250 here. But again, certainly a stock to watch both in terms of direction and also potential for volatility. AMD is another stock today that's seen significant activity. A large update, nearly 4% on the session. And where you're seeing AMD is the 10 September expiration. So you come in here, you got 9,500 contracts. You've even got some stuff way out of the money out here, but it's the 110 strike is of interest, mostly buying activity on the 10 Sep expiration. Now, 110 is not extraordinarily out of the money, but again, it's one to watch for potential movement and volatility in the coming weeks. And it even spilled over. While I would not necessarily encourage people to trade SOXL, it is an indicator. It's up to 8% today. And what you saw on SOXL was a SEP 42 calls, predominantly bought. Those have now moved in the money a little bit. So it's just kind of rounding out the bullish interest that occurred today in semiconductors. So something to watch in the coming week. As we look at some of the commodity space, GLD, for example, was also up today, along with, for example, Ford/BTC. We're seeing continued strength in gold and Bitcoin. Again, it's one that kind of got wriggled out here on the decline. We've rallying back up again. Again, I'm not sure we're in a great position for gold to do extraordinarily well, as long as the Fed is kind of in the mode of potentially tapering. However, maybe there's some near-term upside to 171 here. As we circle back to oil, since we talked about energy, oil found a sharp rebound back up at that 65 resistance as we're approaching more data points on oil inventories. On Wednesday, for example, a lot of the weakness last week came down to what? It came down to lesser demand on the part of refiners. With the Delta variant spiking, does this indicate lesser potential, travel, etc., in the near future? It's a possibility, but the CDC did come out potentially and say the Northeast might be peaking, right? So maybe we're reaching that peak time for the Delta variant. maybe we start to see cases decline and maybe alleviates some of those concerns. For example, a company today that saw some bullish activity on the travel side of things is MLCO. Sorry, I couldn't read my own writing on that one. But MLCO, it's been heavily oversold. Melco Resorts and Entertainment. This one was a roll. It was an October expiration, so not super exciting here, but a bit of a roll down from the 13 to the 12. Basically, signaling a little bit of an anticipation that maybe we're starting a bottoming process here, moving it down to the 12 strike where it could potentially start to move in the money. So this is something to watch. If the Delta variant does start to come back in the coming weeks, if we are starting to peak and maybe go circling back to some of these entertainment companies that may be a bit oversold. We'll kind of wrap things up with another stock here in TJX. TJX has been on a tear. Again, it's been a source of volatility. It's also been a source of significant option activity over the course of the last week. And again, today is not any different. While we may see a pullback from here, we did fade from the high. Again, remember, as we're seeing this activity persist and build in a lot of these names, does create potential for movement. In this case, you'll see out here the 77 strike, nearly 7,000 contracts traded. Again, mostly bought at the 77 strike. Can we get to 77? We almost made that here today. But again, one to watch for potential areas of volatility in the coming week. Well, folks, it's been a pleasure being with you today. We'll see you back next Monday for the video. Of course, we got coming up throughout the week. Anyway, thank you. Have a good one.